Welcome to Daily Wisdom from the Flippening podcast. These episodes feature short, to-the-point clips from our full-length interviews. We talk to the men and women behind the trades, crypto exchanges, and regulations with the goal of helping you become a better, more informed investor.
Hi, I'm Michael Kaplan, editor of the Flippening podcast. Today's episode is from a 2018 conversation with Ari Nazir, founder and managing partner at Neural Capital, a hedge fund focused on crypto assets. We discuss how a general lack of sophistication among crypto investors makes it profitable to trade against popular opinion. For the full conversation, check out Flippening episode 13. And now, without further ado, our conversation with Ari Nazir, founder and managing partner at Neural Capital. Enjoy.
One of the rate limiting steps in this entire ecosystem is there are only so many technical minds that actually understand what a blockchain is. There are even fewer minds that can actually build. So if you are a long-term hedge fund, the average age of the managers is like 26 to 27. So these are relatively young people that haven't actually gone through cycles. You know, the most recent cycle that they remember is the Great Financial Recession of 2007 to 2012. You need those more experienced hands and more experienced people playing to help you think through like technical long-term signals. But there's a massive opportunity if you're qualified and competent to take it, that without knowing the actual underlying technology of the project, you can take long-short positions just based on the technical indicators.
Can you describe just maybe in a paragraph, I guess verbally, what sentiment investing is?
I believe sentiment investing and sentiment trading is an amalgamation of signals taking into account behavioral economics and market psychology over any given period of time to invest in a certain way.
When you think about decisions you would make as a sentiment-driven investor, what are the indicators that are most important to you? Can you do sentiment-based investing purely with market data, or do you also incorporate number of members in a Telegram group, number of mentions on Twitter, number of Reddit posts being mentioned on CNBC Fast Money, etc.?
Number of Telegram groups, I don't know who to blame for this, but I do think somebody needs to be held accountable. The number of Telegram users that you purportedly have is not an indicator of your community strength in any way. Because at the end of the day, I can buy those users and fake the volume. You know, Ethereum isn't used for ICOs because Vitalik was able to get 20,000 Telegram users in his Telegram in like a week, right? That's not why people use these currencies. So Telegram users, like, we obviously monitor that. We monitor GitHub commits, but a lot of this still comes down to actual human research because, you know, the GitHub commit example, just because I look at GitHub commits, that's actually a pretty sophisticated way of potentially manipulating the price or quality of your token. Because just because I can see that you're committing a certain period of time or a certain amount of time over a period of time, that doesn't necessarily mean that your token is, or your coin is built on a blockchain that's actually technically viable. Some examples of that would include like me going on and seeing like there's like 300 stars for a repository on GitHub and then seeing contributions from a number of engineers. But when you go dig into it, it's like they're fixing grammatical errors. And then you see those same people then go out and say, oh, well, I'm a core contributor to this particular blockchain. But then being able to call BS on that is super important because, yeah, I could use that as a sentiment trader. I could do well in a bull market. That is completely irrational. But as like we mentioned earlier, as you see this flight to quality, not just in terms of capital, financial capital, but intellectual capital, you know, having somebody on a team that can actually go in and review the code and then review the quality of the code and then say, okay, this is actually pretty good. Or the average contributor on here is like, they're contributing lines of code. So it's the type of person that doesn't understand that the number of lines of code that you have doesn't actually mean that it's higher quality or a more sophisticated project. To the CNBC Fast example, we actually did a pretty interesting experiment where we automatically shorted anything that CNBC covered. And we did really, really, really well. A good example of this is Monero. Obviously, I believe in the long-term use case, and technically our head of research is in love with Monero and advocates every single time I talk to him to put even more of our portfolio into it. But when I saw it covered on CNBC, and I remember sending you an email about it, and I was tweeting about it too, we called it the Bitcoin Chad trade. It's that person that shows up on your Facebook after like 4 years after the last time you talked to them at college graduation or high school graduation or wherever, or a wedding. And so it's like, oh, hey, bro, I brought Bitcoin. It's up like 80%, you know, because I'm a genius. And everybody's a genius in that financial bull irrational market. But, you know, you start seeing it covered on CNBC We did this with Monero. We ended up shorting it, and we ended up making about 18% in 24 hours because they covered it. I would do the same thing with Stellar. So they put Stellar in I believe this was earlier, maybe January or February. They're like, oh, Stellar is the next Ripple. I was like, oh, well, kind of forced my hand, Brian Kelly. I guess I have to short this now. And so we ended up shorting that despite the fact that we are, bullish on the longer term prospects of Stellar. And we think Jen McHale was probably the smartest person and most accomplished person in the space. We call him Crypto Bezos. But still, like anytime you see something from a popular media outlet, as the hysteria is taken off, and in a speculative bubble provides massive opportunity if you're capturing the market psychology and being able to use behavioral economics in any given way.
That's it for today. If you like what you heard and want to support the show, please consider leaving us a review on iTunes, Stitcher, or wherever you listen to podcasts. If you decide to leave us a review after subscribing, we'll send you a free Nomics t-shirt. Just hit us up on Twitter at username Nomics Finance after you've left the review, and we'll hook you up. You may also be interested in Nomics.com, our crypto market cap and pricing website. Check us out at Nomics.com, spelled Nomics. Now stick around for our legal disclaimer. All opinions expressed by podcast hosts or guests are solely their own opinion and do not reflect the opinion of Nomics or any other company. This podcast is for informational and entertainment purposes only and should not be relied upon as the basis for investment decisions. The producers, hosts, and guests of the show may maintain positions in the companies or assets discussed today.